Good morning, everyone. Thank you so much for joining us. It's great to see a packed crowd out here. I know we have some overflow rooms again. I know you just joked on the side, crypto's hot again. You could definitely see that in the crowd today.
This is the most packed conference I've seen.
Yeah, last 2 years definitely went to a couple that had maybe 5 people in the entire audience. So I'm really excited to be joined here today by really 2 giants in the payment space in crypto to talk about what is one of the hottest topics in blockchain, which is both stablecoins and what the future of payments is going to look like. And what's great is that we have people from different backgrounds. Michael, obviously, coming from more of the crypto native side, and Vasant, now in crypto, having worked in crypto through his time at Visa over the past years, but representing more of that TradFi move into crypto. So I think we can learn a lot about what the future of payments is going to look like. Vasant, maybe we can start with you. And I'm curious, as someone who was in the more traditional finance payment space, when did you start learning or getting interested in blockchain? And why do you think blockchain really is a right solution for changing how payments works?
So as you said, I mean, I retired from Visa 18 months ago, so I have really no affiliation with Visa, and I want to make sure everybody understands that my views are my own and don't represent, what Visa's views might be. But as it relates to the blockchain, I got interested in it quite a while ago, around the time when, Bitcoin was really taking off. And what really caught my interest at that time was what I thought was extraordinary technology, i.e. the blockchain. And my thesis from the very beginning has been that, the internet came around 25, 30 years ago. I've always viewed it as a network for content, right? It moves content around. It was built for content. And then people said, we can do commerce on it. And there were a bunch of things around that were, digitizing payments. And whether it was ACH or Visa and MasterCard, they were plugged onto the internet, but they were never really built for the internet. And when the blockchain came along, my view was, well, here's a technology that is really built for the transfer of value, to transfer value. And I don't mean to say value as in just money, but value in general. Do it securely, do it fast, do it, cost effectively. And so it's sort of, in my view, the network that is the internet-ready value transfer network. And that's sort of the reason I got interested. Now, there's a long way from concept to reality, and Michael is one of the people sort of making it all happen, but that's where it all started.
And I think that's a good segue into Michael's side, which is, and maybe not everybody in this crowd comes from a blockchain background or is quite sold on blockchain as a solution. So Michael, maybe you can help answer what blockchain really does, what its value add is to the existing payment system, which I think, especially from a US perspective, seems to be working pretty well.
It's working okay, I think. If you basically read kind of the history books on MasterCard and Euroclear and basically all those systems, right? It's clear that they've all been built through the 60s and the 70s, right? And actually, if you really read how they were thinking about the technological solution over there in terms of the ledger, right? They were actually trying to build a blockchain. The only problem is that they had a CPU the size of a calculator those days, right? So the solutions that they came up with and the communication they had at hand were such that those were closed networks that are fragmented, they are non-programmable, and there is a lot of clunkiness over there. I think in the US, again, there is a lot of patches that were built over the years to make it feel more streamlined. I think the most exciting thing about crypto, the crypto rails, right? And when I say crypto rails, it's basically a permissionless or sometimes even permission, but basically public blockchain like Ethereum, Solana, Polygon, so on. Is the fact that you have a technology that is fully compatible running on the internet that are able to do a transfer from account to account in real time, and it is not centralized. And also, in most of the cases, right, maybe like, with the exception of Bitcoin, it also allows extension and programmability by pretty much anyone, right? So you can come in and, first of all, use this as an initial kind of layer or hub to move money between accounts, and anyone can have an account on that layer. And later on, you can have other people come in and build financial applications or applications that interact with the value in a fairly open way that creates a lot of innovation. Good examples is like all the swap protocols that we have, like Uniswap, that are able to do conversions, lending protocols like Aave and Compound that are able to facilitate various relationships from lending and borrowing. So those are just some of the examples.
So I think one of the problems with blockchain is it is so theoretical, and it's not something that we can really conceptualize on a day-to-day basis. We're not necessarily interacting with it yet, and it's been that way really since its inception 15, 18 odd years ago. So maybe, Vasant, and I know, understanding that you're no longer speaking on behalf of Visa, but obviously we're exploring blockchain during your time there. Can you give an example of where blockchain would enter the Visa ecosystem and how it would really change how a payments operator like Visa approaches payments or uses payments?
Yeah, I think if you've been listening to what Visa's been saying for quite a while, Visa has been for quite a while, let's say, rail agnostic, right? Visa's been saying for a while that they want to be a network of networks. The goal is to get your money where it needs to go. And if it needs to go on other networks, that's fine. So Visa, through its Visa Direct business, has been using ACH and RTP networks, and has been looking at using blockchain networks too, since the beginning. Right now, I think Visa Direct connects to dozens and dozens of ACH and RTP networks already, and we'll do the same with blockchain networks. So in that sense, the blockchain is a set of rails. You could, if you want to use old terminology, and Visa will use those rails where it makes sense to use those rails. So that's one way to think about it. In the end, I think what's important to remember is that rails by themselves don't create a network, right? A network really is more than rails. It's about having nodes that want to interact with each other or do business with each other, whatever you want to call it, and a set of rules they operate by. And sometimes people forget that, the whole concept of a Visa and MasterCard, I think the power of the concept has been a large quantity of people who want to do business with each other, which increases the value of the rails, right? The network's value is a square of its nodes. So you have to have people who want to interact with each other and large quantities of them. And Visa has rules, and those rules are very important. Everybody agrees to a certain set of rules. So you need that also on a new set of rails like blockchain, right? You need to create that kind of critical mass of people who want to interact with each other, do business with each other, and agree to a set of rules.
So you say that a company like Visa will start using blockchain as rails where or when it makes sense, and that also you need this network effect, or I guess network buy-in, for that to happen. What are the obstacles to that happening, and when do you think blockchain will actually make sense to be used on a broader non-crypto native scale?
Yeah, I think you really have to go use case by use case, and people should remember that you have to understand the value proposition that you're offering. Even if you're using the blockchain, you have to have a value proposition that is better than the alternative. So you can't just generalize. You sort of have to take a use case and say, okay, why is this going to be more advantageous to do it using the blockchain rather than an existing set of traditional rails? Now, there is already a space where you need to use the blockchain, right? Where people have already adopted stable coins, either because it's a liquidity provider for cryptocurrency trading they may be doing, or DeFi, or you're living in an economy where you want to hold your savings in a stable coin that is, more reliable than your own local currency and so on. So there's already a universe of what I would call crypto native use cases where it's obvious that if a Visa or MasterCard has to play, then they have to be able to deal in stable coins or something like that.
So let's break that down a little further. And Michael, maybe you can jump in here. The use cases I think we've seen already, as you mentioned, one is, like I said before, this crypto native use case where crypto traders or people working with DeFi or decentralized finance applications will want to use stable coins because it's already native to the ecosystem. Remittances are a different one, cross-border payments. What are use cases that you've seen that have worked, and what are some that you think might be coming in the near future?
Yeah, so maybe just to ground us on some of the statistics that we are seeing. In 2024, through Fireblocks, we transfer about $3.6 trillion of value of different, let's call it like cryptos, right? Interestingly enough, 54% of it was stable coins. Vast majority, basically like 80% USDT, 20% USDC, and then, maybe 98 is like, that entire thing, and then 2% some other stable coins. So we actually did quite a lot of analysis to understand, okay, what are this 1.7 trillion dollars of stable coins, which represent, by the way, depends on the month, between 10 to 12% of the entire transactions on USDC and USDT. About 1.1 or so trillion out of it it's basically used for the trading, basically to facilitate trading of other cryptocurrencies, right? So you have someone buying Bitcoin, the other side is basically delivering it instead of just like cash through the bank, they're delivering through USDT, or it's some activity that is being done over DeFi, right? Then actually, on a national, from a national standpoint, the fastest growing use case is truly payment, right? So it's still much smaller, right, from the volume that we see that is being used for trading crypto, but on a year by year, it actually growing 50%, at least in our system, 50% year over year. And when we break down it farther, right, what are some of those 300, 400, 500 billion dollars of stablecoin movements represent through the different payment companies, like MoonPay, like Bridge, some of those players, the biggest activity right now is really cross-border transfers, right? So that has two use cases, right? And by the way, it's pretty clear why cross-border transfers is the first and most applicable use case for stablecoins, because for anyone who've done a transfer through SWIFT, right, it takes few days. One of 10, 20, 30 transactions will get stuck somewhere, and you need to call the bank and understand why it didn't get to the other side. You're being charged, $50, $60 for the transfer, and it's completely unpredictable, right? So the fact that it's expensive, unpredictable, and also takes a lot of time makes it a prime target from something that is not even 10x, 100x better in terms of use case and utility, right? And this cross-border is basically broken down to two, let's call sub use cases, right? The first one is business to business, right? So you have people, merchants, businesses, importer, exporters, right? That they need to send money around the world, and they basically figure out that their counterpart in Hong Kong, in Latin America, and so on, is able to accept stable coins, and they use that as the main rail. And the second component is just basically kind of peer-to-peer remittance, right? So you have individuals that they have family, one country, they want to send the money back, they will do it this way. There's also some use case that is a middle ground between the two, that it's different contractors, right? So it's basically individuals that they're working for a company in Europe or in the US, for example, in Colombia, and they prefer to be paid in stable coins. That I think, like, is what's growing the fastest right now. In terms of your question, like, I think what's next, there is, because that was already being proven to work, I think this is where it's going to continue to grow. And the what next is that we will start seeing other participants basically coming in and leveraging stable coins for those cross borders because they don't want to rely on corresponding banking. And it can be bigger corporates that we're actually seeing, for example, doing this activity in Africa and so on. It can be a lot of payment service providers. And we're also starting to see kind of tier 2 and tier 3 banks in the United States being interested in leveraging it because they don't want to rely on the corresponding banking system that they're currently part of, in a sense, but they're not definitely like, the one in control in that entire scheme.
So it seems like you can put where payments and crypto is happening into two buckets. One is the crypto native type trading and settlement. One is cross-border payments, which can either be institutional or remittances, so individual cross-border payments. But it seems for really mainstream adoption of payments to happen, you would also need some sort of domestic payment adoption. I have to imagine, I don't know the statistics, but for a Visa or MasterCard, most of the payments activity wouldn't fall under those buckets. So I'm curious, Vasant, if you think that crypto payments will ever break out of those use cases and into something that maybe people in this room would interact with more on a day-to-day basis.
Yeah, I think as Michael highlighted, right, if you broaden what you just said, the initial use cases, not surprisingly, are where the traditional financial system was not doing a good job, right? They're underserved parts, whether it is, parts of Africa, whether it is certain kinds of use cases, like remittances going to certain parts of the world. So that'll always be the case. I think, people starting to build businesses using Fireblocks technology, for example, to serve different use cases, I think you should look at where is the existing infrastructure of traditional finance not doing as good a job as they could. Because there are parts where it does a very good job, at least relatively speaking, so the bar is higher. So when you get to domestic payments, and you can break it down at a very crude level as low value, high volume payments, right? Which is a lot of what Visa and MasterCard do, which is, small payments that are done at very high volume. The bar there is quite high because you need a very large network of, people who are interacting. So the critical mass is very high. And you need to be able to do it, I like to say, in milliseconds for millicents, because this is how the traditional people do it. So you have to have an economic proposition. You have to offer something that is better. And so you sort of have to look at what you're up against. There's also domestic payments that, again, to use the crude word, that are high value, low volume. And those may be areas where there's more opportunity initially because, it may be possible to do it better. I mean, obviously the blockchain is 24/7, which is, clearly better than some of the networks those people use, the ones who are doing high value, low volume payments, a lot of B2B payments. And sometimes the cost may not reflect, what a blockchain-based solution could be far better. So again, I think it comes back to if you're building a business, look at what the alternative is, and can you offer for want of a better term, a better mousetrap.
Vasant, I know you talked about, this dichotomy of what's important with payments, the technology itself versus the network, and you need this buy-in of financial institutions or merchants or people actually using it. And I always wonder this with crypto, especially now, where, as we talked about at the beginning, we're in maybe one of the most bullish moments for the industry in recent memory, with obviously the government being much more accepting toward it than ever before, and legislation, including for stablecoins, on the horizon. But at the same time, I think this reputation very much lingers of the scams that are inherent to the industry as well. I mean, we just saw President Trump have his meme coin and announce that the top holders are going to be able to come to a special dinner with him. I want to ask both of you, do you ever worry about that tension, that you won't be able to get broad buy-in because of this lingering perception of crypto as maybe not the most stable or reliable network to transact with?
I think that if you look at the history of financial, like the financial history, every time that you had a new system or a new instrument, there was pretty significant amount of scams and bad actors because it's just money, right? And it just takes time to really kind of put the rules and regulations that and the technology, to be honest, right, to basically make it much more acceptable and confined, right? I mean, unfortunately, I'm like old enough to be already like in the cybersecurity space when internet banking came along, and people don't remember, but the issue of account, what we call like account takeovers, right? That's people basically steal your username and password to your bank account and log in into your bank account and will still just like wire out money from your bank account. 15 years ago, it was like $1 billion per year loss for the financial industry, and eventually, we basically developed tools and capabilities to fight it, deal with it. There is also like now much clearer regulation who owns the liability if something happens. So I think we will need to see some evolution in that regard. Having said that, I do think that sometimes people need to be a bit sensible about actions they're taking and the potential reputational, hopefully short-term reputational damage that is being created to the industry, but hopefully it is a short-term one.
Yeah, I mean, I wouldn't disagree at all with anything Michael said. I mean, financial innovation, the history of financial innovation is always there's always a period of, massive, let's call it, risk and, even a bad odor of some sort. I think it's incumbent on the industry, companies like Fireblocks and others and Coinbase to make a very concerted effort to, build trust, build credibility. Regulation, I think, is a friend of the industry. Sensible regulation will help the industry. So I think it's a matter of time, but the industry has to play a very active role in making it happen.
But by the way, as an anecdote, you probably remember the number because it's kind of a famous story when Visa initially launched, right? Like as the Bank of America card, when they did their initial airdrop of cards, then the first year there was like some kind of crazy fraud, right? And almost like bankrupt.
I mean, there's a podcast, as you might have, the Acquired podcast on Visa. If you haven't listened to it, is very well done, and they do talk about the early days. And yeah, there was quite a lot of fraud that they had to deal with. But look, I think we're at the point where it looks like there's been a few years now under the belt, and there's talk of regulation. The industry has matured. There are some bigger players in it who can, set the rules. So hopefully it starts to change.
Although it might also be sad if crypto loses its degen corners. I know there's a lot of excitement, and there has been for a while, around stablecoins as really this vector for payments in crypto. Obviously, we have stablecoin legislation potentially right around the corner. But I'm also curious if you think there are other avenues for payments within crypto. I know that in the past there was excitement around the Lightning Network on Bitcoin. I know that's still being developed. Do you see other parts of or other technologies within blockchain that could lend itself to payments?
I mean, first of all, like funny enough, there are now projects that are trying to do stable coins on Bitcoin on Lightning Network. So maybe the short answer is yes. But I think it's more of a monetary question, right? In terms of what is the value that people want to accept on the other side, or when there is a financial transaction. And I think it's just like generally speaking accepted that you when you negotiate a financial transaction, right, then the value that is being exchanged, at least like, during a certain period before the transaction and during a certain period after the transaction, the value is supposed to be stable, right, or supposed to be agreed. I think that is a bit of a problem right now, is just using the, Bitcoin or some of the bear assets of the underlying to facilitate that. That's a nice thing about, I think, stable coins now. Can Bitcoin in the future stabilize to that level, or being accepted as kind of the mark to which you basically count a stable value? That might be the case, right? But I think it will take a few years for that to happen. Can we have, I know that no one wants to say that word anymore, but can we have some form of an algorithmic stable coins that don't blow up and wipe $40 billion? Maybe someone will come up with a technology that is able to do that is accepted. So there is definitely room to more innovation in that regard that goes beyond just basically kind of a fully backed. But the only thing that I would say there, that it has to happen in a very safe environment where you can make those experiments. Because if there is something to learn about Terra Luna, is that it's very hard for most people to understand the financial mechanics of really complex instruments, and if they are not being marked or marketed properly, that can create a lot of trouble and pretty significant damage to a lot of people.
Yeah, I mean, as they say about money, it has three characteristics or three uses, right? It's a store of value, a medium of exchange, or unit of account. And if you're talking about the payment use case, having something that is volatile, where it's worth something different by the time it gets there, is a real issue. There's also the cost of executing the payment, right? I mean, if gas fees are very high, I mean, it's not going to be, it's not going to be very good. The other thing is, I think for very long, and it is in the interests of the world of blockchain to have good sort of intersection with traditional finance. And what makes stablecoins particularly attractive is, you use dollars because lots of people will accept dollars. If you're going to deal in a currency that is not widely accepted, then it loses its value. It's not as valuable. So I've never been a believer that Bitcoin-based payment mechanisms will work. Now, maybe at some point they might. I'm a huge fan of stablecoins. I think they are, in many ways, at this point, the killer app for blockchain. And there are good reasons for it.
Yeah, and maybe like one thing is that we usually think of stablecoins as kind of the way that we understand USDC and USDT, right? But for example, as banks are now looking to enter the space, they're actually thinking about tokenized deposits, right? Which is a slightly different instrument when you're thinking about the financial engineering and the counterparty risk and all that stuff, right? And I think that there are still some jurisdictions, although not the US, where the concept of central bank digital currency still kind of like live and kicking, and people are experimenting. So there's also kind of some of those instruments that might be used for payments.
So we have a couple minutes left, and I know we are at a student-run conference, so I'd love to get both of your perspective. If you have any recommendations for people in the audience who want to get into blockchain or get into the payment space, any guidance or tips you can give?
Well, I'm a huge fan of the payment space in general. I think it's a fascinating area. It's very complicated. It's very subtle. And there's tremendous opportunity for value creation here. And blockchain, I think, is going to be a very important technology in the payment space. I think what I would say to you is there's two aspects to this. There's technology, and then there's financial services. And very often I see people coming at it from one side or the other. If you come at it from the technology side, you often miss the subtleties of financial services. If you come at it from the financial service side, you sometimes don't fully understand the technology. I think if you can be someone who can marry both and understand both, I think it makes you very valuable. So I would certainly say this is a great area. And if you can sort of understand both sides of it, I think you will do very well in it.
Yeah, I mean, first and foremost, there are, I think now, I don't know, dozens, if not hundreds, of startups that are entering specifically into the space that they're for sure looking for talent. I think that there are also a lot of incumbents that are basically looking for talent that will help them to navigate. But first and foremost, actually going back to how we started the conversation, I actually think that it is a very accessible technology, right? Because if you want to try and build or play with an integration into JP Morgan, and basically it was like the payment rail on JP Morgan, good luck. They will basically go, you need to, I don't even know how you get access to that in terms of due diligence and the amount of agreements that you will need to sign. But if you want to play with stablecoins, right, to open a wallet and then to start building on top of it and just to use it and experience it yourself, it's pretty trivial, right? Anyone can do it, with any amount of money, which I think is really powerful for people to experiment and come up with ideas. And yeah, but basically I think just getting involved in this space is generally speaking quite easy. And I think that, with all the tailwinds that we are seeing here right now in the US, I think there will be a lot of business activity and a lot of people that we will be looking for talent that has that experience.
So go make your own startup, or you can check the Fireblocks job posting site.
Yeah, or you could go to all the payment companies that are using Fireblocks and check their posting site.
All right. Well, we're at time, but thank you so much to my panelists for joining us here today and to the audience. Thank you.